There's a giant misconception in the crypto space right now. The media is portraying the actions of a few bad actors and a few bad exchanges and translating that to all cryptocurrencies being a scam. Not only am I going to break down this story for you and tell you what's truly happening, I'm also going to tell you why I think Bitcoin is the best asymmetrical investment over the next 10 years. Make sure to stay to the end of the show to get all the details. Welcome to the Dan Habib Show. I'm Dan Habib, your host. A couple quick reminders before we get started. If you want the best mortgage and real estate insights on a daily basis, check us out at mbshighway.com. And if you want an edge and you want to be in the know in the crypto space, check us out at CryptoCharged.com. Use code Habib for 40% off. And please like and subscribe below. So let's jump right into it here, team. I want to address a really big misconception and some really poorly portrayals of the crypto space that's occurring right now in the media. I'm sure all of you have heard about the FTX scandal, their exchange going bankrupt, and tons of people losing billions and billions of dollars. First of all, I want to just say that this is a terrible situation, and my heart goes out to those that were impacted. But the problem that I have with this situation is that many people are using it to put a black eye and a bad name on all of actual cryptocurrencies. Let's break down why this is not the right thing to do. So what happened here is you had exchanges. Right? And an exchange is not a cryptocurrency itself. An exchange is a marketplace where investors like you or I can go to buy and sell or buy and trade cryptocurrencies. Now, this is just a facilitator of buying and selling and trading, much like how in the stock market you have the New York Stock Exchange. Now, just because something happened to the exchange itself, and in this case, we're talking about FTX or let's say Celsius or BlockFi, it has absolutely nothing to do with the underlying cryptocurrencies or them being a scam. But FTX, it was a bad actor. Sam Bankman-Fried, he was a liar. He pulled the cloak over everybody's eyes, and he was really, for a period of time, the darling of crypto. You had all kinds of big-name investors supporting him, backing him. You had Mr. Wonderful. Boy, you even had Tom Brady investing something like $650 million with him. But it was all a scam. It was all a lie. They were utilizing their sister company to invest, use leverage, and basically misuse customer funds. And when there was a run on the exchange, guess what? They didn't have the assets. They did not have the customer funds because they were misused. And unfortunately, people lost out on a lot of money. Now, it would almost be like if something happened with the New York Stock Exchange, and then all of a sudden, because there were some bad actors in the New York Stock Exchange, which you wouldn't see because it's much more regulated than an exchange that's in the Bahamas. However, if something happened to the New York Stock Exchange, you wouldn't then go and say that an individual company or stock is a scam. It has absolutely nothing to do with that individual stock, or in this case, nothing to do with individual cryptocurrencies. So I just want to make that point clear. But it is important to know that this is causing a lot of fear out there. This is causing people to sell, but this is also causing people at a record pace to take their coins into self-custody and take them off of exchanges so they don't have that third party or that counterparty risk. One of the biggest benefits of cryptocurrencies is you can take self-custody. You can actually hold on to them. You don't need to leave them with a third party on an exchange. And we are seeing self-custody in record numbers. I think this is prudent, and this is a lesson. Oftentimes, a lot of people have to learn lessons the hard way, but this is a lesson that many people are learning now. Now, let's talk a little bit about cryptocurrencies because, listen, some of them are scams. Some of them are Ponzi schemes. Some of them people pump and dump and they pull the rug out from under poor investors that don't know any better. So you need to make sure you're doing the research. You need to make sure you're looking into who's backing it, who the influences are, what the actual utility, probably the most important thing, meaning, is there any really reason for this coin? Is it providing any type of value in the economy? Or is it just a meme coin? That's something important that you need to realize. But the other thing is that the point of cryptocurrencies, in my opinion, was decentralization. What decentralization means is that it is not centralized, meaning you don't have a system or a financial system like we currently have in the United States, which is a centralized fiat currency system with the dollar. So what that means is this. Nothing works in our world without trusted third-party central institutions. So if you think about transactions today, right, we have the dollar. Now, the dollar is fiat currency. What that means is that it is basically has value by decree, meaning because the government says it does, and it is accepted as a means of exchange. It's accepted as a transfer of value. But there's actually nothing backing the dollar bill. The dollar bill is really no intrinsic value at all. It is a paper representation of value, but it's not backed by anything except for the full faith and credit of the United States government. You know, back in the day, it used to actually be representative of physical gold that you owned. But listen, gold, while it's maintained its value over 5,000 years, gold was not a realistic means of payment. Gold, you can't necessarily take all your gold bars with you and put them in your pocket or, lug them over your shoulder. It's not very portable. So what they used to do is they used to house the gold at these different places where you would have depositories, and they would give you paper receipts. And that was the first form of paper currency. They used to only print it on one side. That's why they used to call them greenbacks. But the bottom line here is that this used to represent actual physical gold, and there was a clear representation there. But what happened? Well, in 1933, you had FDR who co-opted the gold, essentially. What he did is he ordered people to bring their gold in, and he essentially confiscated it. And he raised the price of gold. He literally took it and said, hey, guess what we're doing? We're revaluing the price of gold. And once they did that, people then had inflated currency. And this is something that anytime you see a central organization get involved, there's always the potential for misuse, for mismanagement. But that's why gold didn't end up working. And we have this fiat system now, which is kind of like make-believe money that's backed by the government. But think about how it works. So if you have a physical transaction where you have paper money and you hand it to somebody, that's pretty easy to understand. It's finite. And it's a quick transaction. You give me the goods, I give you the dollars. But how are most transactions done in our world today? They are done digitally. And what is the problem with digital transactions? Well, anything can be copied online, and it can be copied extremely quickly at literally no cost. So how can you make this money work in a system that is centralized like ours? Well, the only way to do it is to have these trusted third parties like banks or like central banks. Now, banks are your intermediaries or your middlemen. And what banks do is they keep a tally for you. They keep a ledger behind their security wall. You go to your bank, all you're seeing is literally some code that's showing you what your balance is. And behind the scenes, you swipe your debit card, guess what? They're going to debit your account. You get some direct deposit in from your payroll, they're going to credit your account. And they keep this ledger for you in real time with the purpose of you being able to transfer value across the internet without copying or duplicating it or double spending it. Now, it would almost seem like it's impossible to do this without a bank or without a central bank. Now, central banks, what's the problem there? Well, when you have ultimate power, there can be misuse and there can be some mistakes made. I think you're clearly seeing the result of that right now. The United States is in $31.5 trillion of debt. We are always running at deficits. We're always increasing the debt ceiling. And this is kind of like a house of cards. Listen, I don't want to sound too harsh here, but you have more debt being issued year after year after year. The numbers keep growing at record rates. And you have the Fed who's monetizing this debt. There's no way once you start this operation for it to end well unless you keep going into more debt. And when you do this, what happens? You devalue the currency. And that's why we're seeing inflation right now. It's come down a little bit, but still near 40-year highs. I mean, we're talking about 7% inflation on a year-over-year basis. That means if you have $100 in your account last year, it feels like you have $93 because 7% of that purchasing power has been eroded away because the cost of goods and services has gone up. So this is the situation we're in. And it's not just the United States. We have a almost $300 trillion debt problem in the world today. Here's the thing with Bitcoin. Bitcoin is a new monetary system. And it's not the first cryptocurrency. There's been other iterations that have tried, but Bitcoin is the first cryptocurrency to actually work. And what the whole premise is that it's a new monetary system that exists without the need for centralization, without the need for those counterparties, without the need for the banks, without the need for the central bank that's going to be determining the price of money and the supply of money. How does it do this? Well, it does it with, it's basically an engineering solution with a protocol. Now, unlike the dollar, which, boy, you look at the money supply, over the last 2 years, it's gone up 40%. No wonder where we have this inflation and our dollar doesn't go as far. There is a fixed amount of Bitcoin. Only 21 million can ever be created. And so far, over 90% of it has already been created and mined. But there's no way for anybody to go in here and to say, you know what? I want to create some more. It doesn't work like that. And it's a smart system. So you might say, well, how is it solving this double spend problem? And how is it able to take digital value and transfer it across space and time here without having a bank that's going to be that trusted source? And the answer is decentralization in a transparent and globally distributed way. And that's what the blockchain is, team. The blockchain is a global, transparent ledger that is doing the job of what the bank does on their own behind the paywall, or these credit card companies. And essentially, you have millions and millions of computers that are plugged into the Bitcoin network, into the protocol, and they are verifying transactions. Now, you might want to say, why would they want to do this? The answer, the reward is in the right place. The byproduct of keeping the network secure and verifying transactions, and to keep this simple, solving hash functions first, they then get to write the block to the blockchain, and they get a reward in actual Bitcoin, as well as any fees tied to the transaction. That is also called mining, folks. Mining or keeping the ledger, being a ledger keeper, are one and the same. The byproduct of keeping the network secure is you actually get or mine Bitcoin. The current reward is 6.25 Bitcoin. Boy, you're getting a pretty penny, even at prices now a little bit above 16,000, if you get the opportunity to do so. Now, a lot of people like to talk about how Bitcoin is worthless. There's nothing backing it. Well, I would argue that there's a lot more backing it than the dollar itself. Remember, the dollar, it has value because of the word of the government, the full faith and credit of the government. Bitcoin, unlike other protocols out there, unlike proof of stake, it's proof of work. What does that mean? Not anybody can mine a Bitcoin. Not anybody can keep these ledgers secure. Not anybody can solve this hash function. In order to do so, you need to consume a ton of energy. You need to have a ton of computing power. And there is actual work being done supporting the value here. But there's also value that is not necessarily as tangible. The other value is that now you have a monetary system that exists in a completely decentralized way, and nobody can tell you who you can send your money to, when you can send it. I can send it peer-to-peer to anybody in the world much faster than I could in traditional financing means. Imagine trying to send a wire internationally. It's going to take a long time, and it's going to cost a lot of money. I can send my Bitcoin to anybody without permission anywhere in the world, and oftentimes mostly unanimously. So this is something that is completely different. But also I want you to think about this. Most of us here, we have money at banks, right? I would venture to say almost everybody listening to this does. Is that truly your money? Well, of course they say it's your money, but do you have unfettered access to it? Well, you can't go to the bank after 5. Sure, you can use your ATM, but there's limits on that. Can you send money after 5? No. Can you send money on the weekends? No. How about when you actually receive money as, let's say, a merchant? Well, it could take 48 hours for a credit card or something to clear. It could take 72 hours for a check to clear. Forget about sending international wires like we discussed. You don't bank yourself is the whole thing. And there's been mismanagement at banks. You've heard about, I'm not going to say any names, but you've heard about some churning of accounts and things of that nature. Once again, when you put trust into a system, there's always the potential for bad actors, misuse, and doing not the right thing. Well, cryptocurrencies, it's the opposite. It's don't trust. It's an untrusted, it's a trustless network. It's don't trust, verify. And you can audit the entire Bitcoin ecosystem. You can audit all 19 million coins out there from your smartphone in a matter of minutes. It's pretty amazing. But here's the thing too. I don't want you to lump together some of the good cryptocurrencies with all cryptocurrencies. Because remember, some cryptocurrencies are scams. Some of these meme coins don't have any point. Now, I do think that things like Ethereum and some other coins out there are good investments and do provide a very noble cause and are actually giving you a good utility. And listen, I invest in things like Ethereum, but by and large and by far, I believe Bitcoin to be the best. Number one, to a big degree, a lot of this is a zero-sum game. Somebody's going to win, somebody's going to lose. But also, when you take a look at Bitcoin, it's the only one that is truly, truly decentralized, that runs on a protocol with a proof of work. And if you look at Ethereum, listen, there's some concerns people have because a lot of the success of it has to do with what happens with Vitalik, their leader. And if they wanted to, this is a proof of stake now blockchain consensus mechanism. They could roll back the blockchain. They could fork off. They could go ahead and maybe start anew. It's not like Bitcoin where literally nothing can be changed. The protocol cannot have significant changes made to it unless there was an overwhelming majority, and then even still, only small changes can be made. So I hope you understand here through this talk why I think Bitcoin is different not only than other cryptocurrencies, but why people talking about how the whole crypto space is a scam just don't truly understand what's happening. We certainly are seeing fear, but also a lot of FUD. And we're seeing a lot of bad actors. And this happens, every 4 years or so in this space. You see this leverage get cleared out in cryptocurrencies. But I truly believe that Bitcoin and some other cryptocurrencies are the best asymmetrical investment that we have available to us over the next 10 years. Now, listen, there's going to be volatility. There's going to be a halving cycle come 2024. Take a look at what happens before and after that, is particular to Bitcoin and all other cryptocurrencies, and you'll see why that looks exciting. If you believe that our tax receipts are going to be greater than our debt in 5 years, then don't invest in Bitcoin. But if you're realistic and you see the writing on the wall of where we are going, debt levels are going to continue to increase. The only way out of this is with more debt and eventually monetary debasement, then I think cryptocurrencies look like a pretty viable investment. If you like it, I'd invest whatever you're comfortable with. If you don't like it, still invest a few percentage points because of that possible asymmetrical investment opportunity that exists. Team, make sure you're not just looking at the headlines and taking the stuff in the media verbatim. Do your own research. Look under the hood a little bit. Educate yourselves because there's some great opportunities. And it's like some of the best investors of our generation, of our time. You want to be a contrarian investor. You know what that means? That means you don't want to follow the herd mentality. You want to be going opposite of the herd. You want to be a buyer on the most pessimistic day. You want to be a seller on the most optimistic day. People are calling for the death of Bitcoin right now. That's when I'd be a buyer. Am I saying that this is the cyclical low? No. I think it's probably going to go lower. But I don't think it's going to go, crazy lower here. But sure, we could see it go down to 11,000. That's possible. Very hard to capture the bottom, though. I'd be happy investing, at least beginning to invest here, because I think there's potential over the next 2 years for this to go above 100,000. You want to be a buyer on the most pessimistic day. And when everybody's telling you that Bitcoin's going to 200,000, that's when you want to be a seller. Until next time, take care, everybody.